Let's talk about the question everyone in finance and tech is asking right now. Are we living through an AI bubble or witnessing the birth of something transformative? Hi, my name is Paul Carroll. I'm the CEO and founder of Avion Wealth, an elite wealth management firm based here in Texas. So when you look at the data, it's not hard to see why this question keeps coming up. Through early October, the so-called Magnificent Seven, that's Apple, Microsoft, Nvidia, Alphabet, Amazon, Meta, and Tesla, they're up about 19% for the year. That's versus roughly 14% for the S&P 500 and 15% for the total US stock market. So yes, the big names are still driving the train. In fact, those seven stocks account for about 40% of the S&P's total gains this year. And collectively, they make up about a third of the index's weight. That's concentration we haven't seen since the dot-com era. When markets start looking this top-heavy, people get nervous, and for good reason. The S&P 500 is trading at about 22 to 23 times forward earnings, well above its historical average. You've also got speculative money chasing every company that drops the word AI in an earnings call. We've seen this movie before. Whether it was dot-com, solar, or crypto, momentum becomes the narrative, and narratives can outrun fundamentals fast. But here's the other side of the story, the part most bubble narratives miss. What's happening right now is an infrastructure build-out on a global scale. The hyperscalers, that's Microsoft, Amazon, Google, Meta, are spending tens of billions of dollars this year alone on data centers and compute power. Meta's CapEx budget is in the high 60s. Microsoft's topping $30 billion a quarter. That's not speculation, that's capital formation. And Nvidia, the company selling the picks and shovels of the AI age, just reported revenue up 56% year over year. When companies spend this much and revenues are actually materializing, that's more than hype. It's a transformation in motion. Every major technological revolution follows the same pattern. In the 1840s, Britain overbuilt railroads. Investors lost money, but the tracks stayed, and they powered growth for decades. In the 1920s, utilities went on an electrification spree. Again, speculative excess followed by lasting infrastructure. And of course, the late 1990s internet boom ended with a crash. But the fiber and backbone laid then became the foundation of today's digital economy. So are we in a bubble? Well, maybe. But I think it's more accurate to call this the messy middle of a technological build-out. There will be corrections, there always are, but what's being built has real utility and real staying power. The key question isn't whether AI stocks are overvalued today. It's whether the productivity gains that follow will justify the spend. My bet over time is that it will. So it's both a bubble and a build-out. Valuations look frothy, but beneath the surface we're witnessing the early infrastructure of the next industrial revolution. History tells us we'll overbuild first and benefit for decades later. If you're interested in this topic, we're actually hosting a webinar, AI and the Future of Finance, in the next week or so. Details are going to be attached to this video. Meanwhile, we wish you the best of investing success. Thank you.